But first, let's start off our Real Talk segment. And I am happy to announce that June is National Homeownership Month. And that means a lot to me because I, as a real estate agent, sell homes. Of course, homes are more than just a place to live. They're actually a place to raise a family, a place to go home from work, kick off your shoes. You don't have to, if you don't have to kick off your shoes. If you want to walk with your shoes in your own house, you can do that too. If you want to take a wall down, you can do that too. Just make sure it's not load bearing. And in addition to that, it's also part of the community. And today it shows that about 65.6% of Americans call their homes their own. And that rate has actually risen to its highest point in 8 years. So I believe the last time it was higher than that was in 2006. National Homeownership Month kicks off with lots of reasons to celebrate. A recent Gallup survey just ranked real estate as the best investment you can make for the 8th year in a row. Now, if you're unlike other investments, the cool thing about a home is you never go to zero value and you got to pay for a place to live. Now, let's just talk about some non-financial benefits. Well, first off, the one I mentioned just a bit ago was civic participation. Owning a home makes you a part of a community. So you can go out, knock on your neighbor's doors. I know in our neighborhood, probably once a week, we're sending banana muffins to neighbors. So only the neighbors we like. So sorry, neighbors, if you're not getting banana muffins. It doesn't mean I don't like you. It's just my wife is not producing enough banana muffins. So feel free to let me know, put in your order. Now I feel bad that I even mentioned it. Geez, I will bring some banana muffins over to you if you feel like you missed out. But that's part of homeownership, is that community participation. Second is pride of ownership. So having that home that is uniquely yours, that you can customize, tear a wall down, put a wall up, build a deck, do some gardening. It's certainly a nice respite from coming home from work, and then a safe place. Owning a home gives you a sense of security and privacy, two things that are super valuable post-pandemic. So now let's go into the financial benefits. So the financial benefits we have out there are our forced savings. So I don't know if you knew this, maybe you do, maybe you don't, but when you pay your mortgage payment, the first couple of years, a very high percentage of that mortgage payment is interest, but there's a small portion that is what's called principal. Now, principal is an example of this mysterious number that sits against your house's value. So it's actually your money you own because you own the home. So principal is an actual forced savings account. So every time you add principal, you're actually just moving your cash from a liquid asset into an illiquid asset, which is the home, right? Meaning it's hard to pull it out of there, but it's still yours. That equity is still yours. The second financial benefit, is appreciation. So in addition to paying for a place to live, that home appreciates in value over time because scarcity is an issue. And that's one we've talked about a lot. And with scarcity comes a rise in values, and a rise in values comes with economics. And I'm no economics major, but appreciation historically has been about 4% annually, and that dates back to 1950s when they were tracking it. Thirdly, financial advantage is financial stability. So owning a home means you'll have better control over your future house payments. When you lock in a 30-year fix at 3%, that locks in your fixed payment amount. If you're renting, if you pay rent of, let's say, $2,300 a month right now, most likely if you're in a lease, it's a year lease. And when that lease renews, it's going to have an increase. So as you're considering buying a home, the nice thing you are doing now is you're locking in that rate for as many years as you plan on being in that home. It's a 30-year loan, but a lot of people either refinance or move. So bottom line, if you own a home, it's time to celebrate. If you don't own a home, let's talk. Let's set up a reason to celebrate this June. That is my Real Talk segment. Thanks for watching. Now, up next, we're going to be speaking with Dan Gelhay with Eastside Insurance Services. But first, here's a short commercial break brought to you by Christine Archer Interiors. So, do you want to add value to your home? Do you want to live in a beautiful home, making memories with your family, or both? Well, first, for most people, your home is your most valuable asset and where you spend your time. Christine Archer's Interior can help you do both. To fit your family and your lifestyle. She spent the last 20 years helping clients transform their home into a place they love. Check her out at archco.com. That's ARCHER, archerco.com. ARCHERCO.com. Now back to the show. Dan Gelhay with Eastside Insurance Services is our next guest. Originally from Minnesota. I don't know why I didn't know that. I've known Dan for a while. Dan has worked in the Puget Sound for over 20 years. He currently resides in East King County with his spouse and 2 children. Dan is in his 11th year in working as an independent insurance agent, and he brings over 25 years experience in finance, risk management, knowledge, and expertise to his clients. Dan's straightforward and friendly approach helps to demystify a sometimes confusing and intimidating product. He works with families of all sizes and complexities to ensure they are properly protecting their assets in a coordinated and cost-effective manner. Dan, welcome to the show.
Thank you, Dan. I really appreciate you having me today.
All right, so we are going to dive into a very interesting topic. Dan did a presentation at a networking group that I am a member of, and what he told me there shocked me. And I said, we got to get you on the show. We got to get you the word out to the community of what needs to happen in the next 2 weeks, really, to protect many, many homeowners out there. And even policyholders of car insurance, right? So it's not just homeowners. So before we dive into the topic, tell me a little bit about Eastside Insurance Services, sorry.
Yeah, big changes coming up. So Eastside Insurance Services, we are a long-standing independent agency, which basically means that we partner with several highly rated carriers, which allows us to create custom-made packages for our clients. And we do all sorts of personal lines insurance. So auto, home, renters, rental properties, earthquake, flood, and then all the toys. So boats, motorcycles, RVs. And I'm big on education. You know, insurance policies are contracts, and a lot of clients see them as overly complicated by legalese that makes them really confusing. So I feel like part of my job is to help customers really fully understand important parts of their policies, and that way they can make more informed decisions about what coverages to purchase and really the reasons behind it, as well as mitigation steps that they may take on their own. And because we're independent, we work for and on behalf of our clients, not any one particular insurance company.
Yeah, I think there's a lot that can be said out there about insurance where you can get and not get coverage based on the price you're willing to pay. And sometimes you're opening yourself up to a lot of liability that you don't know, which is why having somebody that doesn't represent the insurance companies, but a separate agency provides you with advocacy, which is, you know, it's what I do when I'm helping someone buy a home. It's advocacy. It's helping them see so they can choose to not spend that money, but they do it with their eyes wide open.
Absolutely. And we really create a coordinated approach with our clients because insurance, like a lot of other things, has gotten really complicated. So to have that expertise and really have an advocate to making sure that people are properly protected is in their best interest.
Okay, so let's get to the point. There's a law that goes into effect June what?
June 20th.
June 20th, that you will want to talk to Dan prior to that in order to protect some of the things that are going on. Now, I'm going to have you explain that, but I wanted to put that out right at the beginning because it is time sensitive and it does affect everybody in Washington State. So what is going on? What's happening?
Well, as you know, credit plays a big role in how much consumers pay for lots of things, right? Be it mortgage loan rates, auto loan rates, credit cards, etc. And insurance products are no different. And clients may or may not realize this, but insurance companies have progressively been factoring in credit more heavily over the years to help calculate premium for auto, home, and renters insurance policies. Now, part of the reason for that is the actuaries say that one's credit score is a good predictor of future claims, and there's some data obviously to back that claim up. But now Mike Creedler, the Washington State Insurance Commissioner, recently introduced an emergency order banning the use of credit-based insurance scores to calculate rates for 3 years for all auto, home, and renters insurance policies sold or renewed here in Washington. And this rule is set to go into effect, as you mentioned, on June 20th.
Now, when did that come down? When did you decide to do that change?
This came down about 2 months ago.
Okay. 2 months ago. And essentially, between 2 months ago and now, the insurance companies now have to decide a different way of pricing the insurance programs, right?
That's correct. And, really the thought process behind this order is that the rule is going to protect those who are most hurt financially by the pandemic from being forced to pay even higher premiums. So folks who perhaps lost their jobs as a result of the pandemic and who got behind on their monthly payments because of that, obviously would see their credit score drop. Now, according to a study by the Consumer Federation of America, drivers in Washington with safe records and low credit scores pay 79% more for coverage than those with poor driving records but higher credit scores. So the order really is intended to protect those that is going to see their credit scores plummet when the federal protection under the CARES Act comes to an end. As you remember, the Coronavirus Aid, Relief, and Economic Securities Act, CARES Act, was a $2 trillion economic stimulus bill passed by Congress in March of last year in response to the economic fallout by the pandemic. And part of that act included when an individual affected by COVID requests and receive flexibility with their payment obligations from a creditor, the creditor has to report to the credit bureaus that the individual is in compliance with their payment obligations. So that at some point is going to be coming to an end. And the fear is that people's credit scores are going to drop and they're going to wind up paying more for insurance as a result of that.
Okay, so what are the insurance companies doing in response to this?
Well, to be candid with you, they weren't too happy about the order. The insurance industry's argument against the ruling is that one's credit score, again, is a good predictor of future claims. And without being the factor in credit, they fear that there's going to be a destabilization in the marketplace and more people than not will experience rate increases. Now, the insurance industry was unsuccessful in challenging this ruling. On April 23rd, a Superior Court judge denied the industry's request for a preliminary injunction. So the bottom line is that this is happening. So as a result, the insurance companies had until May 6th to file rate plans with the insurance commissioner's office that complied with this emergency ruling. And as of that deadline, about 50 of the 200 licensed companies that can sell auto, home, and renters insurance in Washington met that deadline. Now, since that time, I'm sure more have filed. I don't have the up-to-date numbers, Dan, but the insurance carriers have been scrambling to figure out, okay, how can they adjust their complex algorithms to pull out credit as a determining factor? And they argue that from a technological standpoint, they just don't have adequate time to pivot and comply with this new order. But they don't have a choice, and they're going to have to figure it out.
So do you suspect that, okay, so if I have an insurance policy and there's no real change happening to it, I'm living in my house, what's the big deal? Why don't I just, I'm not affected by this. It's not a big deal, right?
Well, yes and no. So it all depends. So the bottom line is that the insurance market is going to go and they're going to undergo a period of adjustment during this feeling out process. Okay, so insurance companies may begin submitting refined plans in the coming months, and we'll see what that looks like. But the bottom line is things are going to change for every single consumer that buys insurance in Washington. So for the average consumer, here's what all of this means. If you buy a new policy, or when your insurance policy renews after this date, you're probably going to see a bigger swing in premium than what you've seen in the past. Now, whether your rates are going to increase or decrease is going to be determined by your credit score. Here's what I mean by that. So for those of you with very strong credit scores, let's say roughly 750 and above, you're probably going to see a rate increase. Could be 20, 30%. For those of you with lower credit scores, say below 700, now you probably are going to see a rate decrease. So the moral of the story is that if you have really strong credit and you've been considering comparison shopping your insurance, I strongly recommend to do it sooner rather than later, because you're going to be rewarded for the next year on having a strong credit score, and that pricing is going to be factored into your insurance for the next year. Now, you're not going to be immune to it forever, because on next year's renewal,
You will
it's
be
going to
affected by
reset
that.
at whatever it's going to reset at, right? But it's a really good time for folks with strong credit to position themselves in the best possible place that they can, at least for the next year.
All right. So if you have good credit out there and you're like, let's just say you bought your house in July, chances are your renewal might be in July, August, September, anytime in the coming months. Or like you said, if you were planning on comparison shopping anyways, Dan is super highly recommended. And also I am one of his clients. So full disclosure there. But I would say, shoot off Dan an email, give him a call, get the process started. How long does it take, and how do people get a hold of you, Dan?
Yeah, so people can get a hold of me a couple of different ways. They can call me directly at 425-336-6000 or email at dan@eastsideinsure.com. So that's 425-336-6000 or dan@eastsideinsure.com. And
Yeah,
I am
awesome.
more
And
than happy to chat with them and see if it makes sense in their situation to pull the trigger right away before June 20th, or maybe sit tight and wait until after that date.
yeah. And above and beyond this issue, Dan is super comprehensive. He's going to look at your entire situation and give you, might be able to save you money regardless. So I encourage anybody, I'm going to wrap this up and send it out right away so we can get this message out, because time is of the essence for some folks. Great. Is there anything else you'd like to share before we conclude?
I think that's it. I appreciate you having me on the show today.
Yeah, thanks for coming. I appreciate it. Now, before we sign off at the ending of this podcast, I just wanted to let you know we're currently working on a product. It's called Keller Offers Home Ready. And I just wanted to share about this because I'm very excited. Our team has been listing properties, getting things on the market. There's a lot of work that goes in, and just about every home needs a little bit of something. Well, we are going to, by the end of today, we will be certified to offer almost like free money. I know that sounds weird because nothing's free, but it's a program that does a 12-month same 12 months, same as cash. So it's not zero interest, because there is interest, but there's zero payments for 12 months on repairs to get a home ready for sale. So painting, carpet, exterior painting, landscaping, staging. We do this, we coordinate this stuff already, but this is now the money component, where you don't have to actually take a dime out of your pocket. You do run a application, and you do have to have good credit. And then essentially when the home sells, you go ahead and pay this off. It's pretty fantastic. We're getting kind of the finishing touches, and we're going to send out a lot of information about this. But if there's anybody out there that has this home to sell, they're overwhelmed by it, we are adding a general contractor to our team that will run this program for you. So it basically takes all that headache, not only off your plate, but off our plate, because we no longer have to utilize Gabby as the person chasing down the subcontractors. So anyways, long story short, we're really excited about it. I just want to thank my guest, Dan Gelhay with Eastside Insurance Services, for coming on today. Thank you, Dan. Appreciate it. And I don't have any other final thoughts. Thanks for watching. That's the end of the Seattle's Eastside Real Estate Podcast. Thanks for watching.